Economy is very important from jobs and what's driving the economy. I don't recommend buying properties that are in a mining town or relying on one sector, if it's agriculture or whatever it may be, because there's a lot of risk there. Construction industry, we're a developing country, there's 250,000 people migrating to Australia every single year. So these people need a place to live, and construction's always going to be there. Sales listings are super low and it keeps reducing. In the last 3 years, it's just been reducing month after month.
In times where interest rates go really, really high, people in those areas who do have debt on those properties don't necessarily have to suffer too much.
We believe every Australian deserves a right to own at the very least 5 investment properties. I'm Adrian and Trimboli.
And I'm Frank Ambesi, and welcome to the Invest in You podcast.
Hello, Mr. Frank. How are you, my friend?
Good, thank you. Ready for this is our third episode for this year.
Third episode for this year, episode number 19 or episode number 20. Regardless of the number, I think this is probably going to be the juiciest and probably one of the most viewed ones, right? Because in today's session, and I'll let you expand on it, but we'll be talking about, I say number one, the title's called number one region in Australia over the next 12 months. I think I would love, Frank, if we could get one in each city. And when I say one in each city, the states that we're working in. So WA, Queensland, South Australia. I'm sure you'll say this as well, but this is not financial advice. This is not for you to go out there and go purchase in these regions. This is where we will be looking for ourselves, for our clients. But what we're looking for and you going out and doing it on your own, two very completely different things. So should we get into it?
Yeah, definitely. I think it all depends on your circumstances, price point, goals, income, where you are in your journey as well. So let's get into it. Now, there's reasons why we're working in these suburbs, and it was very hard just to pick one. So I said I got to pick 3. So I'm going to pick 3 in 3 different states that we're working in at the moment. So just give you guys as much value as possible. And we'll start off with South Australia. So this was big. I got 2 on my list here, but I'm going to pick the one. I look at a place called Salisbury. Okay, north of Adelaide. It's probably 20 k's or so out of the CBD. It's got a lot of potential there. Now, what I like about it, it's very diverse in its economy. Economy is very important from jobs and what's driving the economy. I don't recommend buying, properties that are in a mining town or relying on one sector, if it's agriculture or whatever it may be, because there's a lot of risk there. It's quite interesting. There was one of our workers used to live in Mount Isa, and now that mine there got shut down, so a lot of people lost their jobs, and people were investing there because of strong rental income and strong growth in a short period of time. But this is for Salisbury in Adelaide, it's the complete opposite because it's very diverse. It's got defence, it's got construction, healthcare, retail, trade, manufacturing. Now, the Holden factory was there, which got shut down in 2017. And they thought that area was going to go backwards from a property perspective. They go, the property market's going to, shit itself, excuse my French. But because of, people want to lose their jobs, it was, employing thousands of people. But now what they've done, there's been a big infrastructure project of $250 million getting developed into that site there. And that's going to change, that site into something moving forward from a manufacturing perspective.
I love it. You touched on something pretty interesting, and I think we said this last week. You mentioned 5 different economic drivers: defence, construction, healthcare, a few others. Now, the obvious thing is, okay, cool, that means it's not going to just bust. But ultimately, why do you like 5 different sectors? What's the purpose around that?
Yeah, it's a good question. It's because you don't want to, like I said, you don't want to be too reliant on one sector. Like I said, that analogy of Mount Isa, that mine shut down, it's really relying on mining. And so what happens is there's going to be thousands of people losing a job, and the property market's going to suffer from that because people are only moving there for one particular reason, and that's just to work in the mine. In this case, you got very diverse economy with multiple jobs, multiple, reasons why governments are going to be pumping money into certain sectors as well, especially healthcare sector. That's always going to be booming. The manufacturing sector that's booming in Salisbury, the defence force that is never going to leave. So and construction industry. We're a developing country. There's 250,000 people migrating to Australia every single year. So these people need a place to live, and construction's always going to be there. So when you look at Salisbury, there's a $4 billion Defence Force project. There's a $1.9 billion park precinct that they're building there. An $840 million train line project. The list goes on. So the demand there of work that's being created, it's happening for a reason. And when there's strong population as well, it's got a very strong internal migration as well. That there is going to create a lot of pressure on the property market because it's an established area. It's not a new estate. They can't just go build properties on the outer fringe suburbs because there's already other suburbs or other regions or LGAs surrounding it. So it's just going to create more pressure on the property market.
Cool. And so that's more from the economic drivers and kind of the work that's going on in there. How about what's actually happening on the ground? Like sales listings, or have you got any data on that?
So sales listings are super low and it keeps reducing. In the last 3 years, it's just been reducing month after month.
Yep.
It's got very strong income levels in Salisbury, which I like a lot, which is, if we go back a further LGA in Adelaide where Salisbury is, if you go to like Playford, which is like Elizabeth and Elizabeth Park and those regions there, their income levels aren't as strong as Salisbury. In Salisbury, they're very strong income levels. So the demographic of people are, I guess, you earn a lot more money, and that helps with, property prices. It helps with getting better quality renters and people are going to look after your property, which is very important because, of course, as an investor, a tenant can make you or break you. And then vacancy rates are at 0.2%, which is literally there's barely any properties on the market for rent, advertised for rent, because there's not enough rental properties. So it's very dominant as well by owner occupiers. Over 60% of people living in there owner occupiers. So strong numbers as well. So meaning that there's not many renters in Salisbury. So this is where you got the 0.2% of vacancy rate in the area.
Awesome. And in layman's terms, that's easy for you to rent your property out if it is an investment property, and you're also going to be able to up your rent. High level of owner occupiers, meaning those are the ones that actually drive the growth from a growth perspective. And then income levels as well being really, really high. What does that mean? That means that, one, in times where interest rates go really, really high, people in those areas who do have debt on those properties don't necessarily have to suffer too much. And then from a rental perspective, people who are renting properties, if rents are raising by $30, $40, $50, because of the income levels, they're able to stay in those properties. They're able to afford those rents. So just in layman terms. But I love it. Salisbury, SA, what's next?
I just want to touch on one thing. So if people are looking into it, you're probably looking over $500,000 or more for a property for a freestanding house.
Awesome.
So just keep that in mind. Okay, so people might be running there now thinking they can find something, but it's not cheap and affordable like it used to be. I wouldn't say it still is affordable, but it's not as cheap as what it used to be at $300,000, say a few years ago. So
a property though under $500,000 though, for the vast majority of us, is considered a pretty affordable property. And sorry, just because you mentioned it, what are we talking in regards to rental returns on average? I know this is a blanket question, but what can someone expect in a region like Salisbury?
Probably a high 4% to mid 5% in between there. Okay.
Thank you, sir. That was very awesome. Let's get into the next one.
Next one, WA. So WA, I picked a capital city that we're investing at the moment. It's Armadale. Okay. Now Armadale's about 30 to 40 kilometers, depending on whereabouts in Armadale you want to go. I'm talking about the LGA of Armadale. So what I like about Armadale, once again, very diverse economy. Got the Defence Force there also. It's got a big port that brings in a lot of work. There's a lot of facilities there. So there's billions of dollars getting spent once again. And it's got a strategic metropolitan active centre project, okay, to develop the whole LGA. Now, it's a bit of it's kind of classified a little bit of a rough area. People that live there might go, oh, Armadale, who wants to invest there? But it's a bit like, your Footscray of Melbourne, and people go, if you go, oh, you want to invest in Footscray, 10 years ago, 15 years ago, but now you would want to be investing there or have a property there because it's over $1 million property prices. It's a place like that. Okay. And so there's a lot of money getting spent. It's very diverse with different types of jobs. Once again, we've got a lithium battery plant, which is not too far from Armadale near the Rockingham region, which is the biggest lithium battery plant in the world. Okay. Which is going to be around for centuries as we got, powered cars and, solar panels and all these type of special batteries powering certain things or vehicles and other equipment. This is going to be around for centuries. So, and not just that, the population growth is very, very strong. So there's a big influx, and that reason, number one reason why, is opportunity, and because of jobs, and of course lifestyle change as well. It's not too far from the water. It's on a coastal town, but it offers a lot. And so it's very affordable. You can probably get a house for probably 400 to 450K or more. If you look at the vacancy rate, it's 0.6%.
I love it. So, okay. And again, just for the viewers, so $450,000, that's your sweet spot there. In regards to your rental returns, I'd imagine probably a little bit higher than your Salisbury. Is that right?
Yeah, you're probably looking 5 to 6%. Now, you probably as well with Armadale, there's things to look out for. Of course, there's some good pockets and bad pockets, so that's very important to be aware of. Public housing and things like that in certain suburbs. So that's where you have to make sure you do your right checks. The good thing is vacancy rates are quite low, so you're always going to get a good tenant as well. And then you just got to watch out. There is some developments happening on the outer fringe of Armadale, so you just got to watch out there as well. Good. The market has grown about 15% or more in the last 12 months, so it's had some really strong growth, and it's probably going to still continue with that growth as well.
Armadale. I can't say I've got a property there, but very, very close by I do, so I love it. All right, let's get to the motherland, Queensland. What do we got on there?
So this was a tough one because I was going to pick a capital city, but I said, I'm going to pick a regional town. And I think one of the powerhouses in Queensland is a city called Toowoomba. Toowoomba is about a 2-hour drive southwest of Brisbane. Okay. The economy there is so strong. It's robust. It's got so many things from Bowen, the plane company doing manufacturing there. There is the cannabis center. It's got a diverse economy with, defense force and the RAF base as well. It produces, the economy produces around $12 billion a year of, GDP. So the GDP is very strong, and it adds a lot of positive growth for, the state of Queensland. So when I look at these things and the money getting spent, it's got a new hospital being built, $1.3 billion, which is, it's already had it. I think it's going to be second or third hospital. There's an inland rail project as well that's going, that's coming in from, I think the inland rail is going all the way up north for Queensland. I think it's, a $31 billion project, and that's adding a lot of work into the economy as well. And it's got a very strong population. The population was about 150,000 people in 2020 and in 2016. Mm-hmm. In 2021, it went from 150,000 people to 173,000 people. So very, very strong population and very low vacancy rates with at 0.6% also.
Awesome. I remember we picked up property there for $420,000, a beautiful home. That was over 18 months ago, 2 years ago. What are you likely to pick up a property for these days?
Look, you're probably still getting there in the outer fringe suburbs, maybe $450. If you want to go to like where we purchased our clients' Miles property and a few other clients, which was like Carney Springs or, the surrounding Centurion Heights, you're looking 600K plus, so the market's moved. If you go to the east of Toowoomba, it's even more expensive. You're looking at $1 million assets are there as well. So that's more the affluent area. So it just depends. And if you get close to the university and your Harris Towns and New Towns, you're still looking probably $500,000 for a house, a good quality house as well. You can probably get stuff that's cheaper, that needs a renovation. And if that's your strategy, definitely you could go with that. But it's a powerhouse economy. And I think it's still got a bit to give. We don't invest here anymore just because we've I think you've missed that boat because there's a lot of growth that's happened since then. As you can see, Miles' property, I think it's grown over, well, back then I think we were 43% in 1 year, which was pretty crazy, but it's still growing as well today.
Yeah. And one key point on that, when we say, when Frank just said they missed the boat, that's a blanket statement. This is going to be a high performer in 2024, right? It will do exceptionally well. When we say miss the boat, we're talking maybe from a selfish point of view. For our clients, we want our clients to be purchasing in properties that are at the start of their growth phase. It hasn't had 2 or 3 years of really, really strong growth, because we want our clients to produce 40% growth. I mean, that's very, you're not going to get 40% growth, right? But that's ultimately where he's coming from. In regards to what it's going to do over 2024, absolutely. With all that work that is going on, with the population growth growing and growing and growing, it's still going to be a big winner in 2024 and for the years to come. So, yeah, very, very good point. Quickly, rentals. What are we talking? Are we talking 5%? Are we talking 3%? What are we talking?
Yeah, look, it just depends on the purchase price and where about the property is, because it ranges pretty broad in Toowoomba. Like I said, you can get something under $500,000 and you get something at $1 million or more. So you're probably looking in 5%. 5%, you might be able to get something at 6%, but probably 4 or 5% in between there on average.
I love it. That's it, Frank. That was 15 minutes of gold. And just to summarize, Salisbury, Armadale, Toowoomba, one for each state. Maybe something that everyone should really think about and really consider and really just open your eyes to. Every single one of those regions had massive amounts of money being pumped into them and also a very diverse economies. So that's not a trend, and that's not just luck of the draw that you've just selected those regions. Those are probably the main reasons why you have selected those regions. The diverse economy and the fact that they're getting billions and billions and billions of dollars spent. So if you want to go out and do that yourself, that's probably where I'd start looking at those two things there.
Yeah, definitely. I guess there's a number of reasons, like we're our 72-step process of what we talk about, but keeping it simple, like Adrian said, infrastructure pipeline, population. If you notice the population growth in these towns are all strong population, internal migration as well, which is very important. Jobs, so opportunity for jobs to work and move to different areas because of a change. Supply versus demand, very, very strong in buying activity. They're kind of like your key fundamentals that when we look at stuff like this, it's just showing signs that this market is going to keep performing and do very well for the 2024 moving forward.
My friend, I love it. I'm looking forward to the next batch of podcasts because we're bringing on a few interesting guests, which I'm really, really excited for. A few professionals in the field, little tips and tricks. But for this one, go out there. Do not listen to us or listen to this and go, I'm going to be buying a property there. You buying a property and us mentioning a few regions that we love and we know that we're very confident that it's going to do very well over 2024 should not be the reason why you invest there. Go do your research. Go find out. Reach out to us if you want to find out more information. But yeah, I love it, Frank. Thank you very much, my friend.
You're welcome, and we'll see you next week.
Bye-bye.